You must have came across a lot of business which are doing well in the market and are profitable, but still somehow they go bankrupt. Now this is an apt example of an unhealthy cash flow statement, because in any business cash is the king, and if not managed well, then business can move towards the brink of bankruptcy. So in our today's video we will be breaking down the cash flow statement into the simplest steps possible. So if you are new to my channel, my name is Aman, and in my channel I simplify basic financial concepts, thus enabling you to have a better understanding of finance and accounting related concepts as well. Now without wasting any further time, let's just start the today's video. Now let us begin by understanding the cash flow statement. So cash flow statement helps in determining the movement of the cash in and out of the business. Now secondly, it also states the amount of the cash generated by a business as well as the amount of cash spent during a particular period of time, might be quarterly, yearly. Now third, this is one of the most important point, because it is not always about how much profit does a business makes, but it is also about how much actual cash does a business have. Let's just understand it with the help of an example. Suppose we have an online business and we have made a lot of sales, and on paper the business is profitable, but however the thing is that all the sales that we have made are on credit, and currently we are running out of cash and we need to meet certain expenses, like we have to pay the rent, we also have to pay the salaries to the staff. So as a result of which we require certain actual cash in order to pay certain expenses. So that is why it states that it is not always about how much profit does a business have, but rather than how much actual cash does a business have, so that it can meet all those expenses. Now let's just look into certain categories of cash flow statement, or the types of the cash flow statement. So number one are cash flow from operating activities. So operating activities generally states that a core business operation or the daily day-to-day operation, for example generating sales or providing of the services. Now second are cash flow from investing activities. So investing activities states the core investing objectives that a business has. Now these are generally long-term in nature, for example purchase of the land or plant and machinery, etc. Now third are cash flow from financing activities. So here the cash moves from the owners and lenders. Now let us discuss all the item heads that come under all of these respective categories in detail. Now let us discuss the item heads that come under operating activities, and first are profit from operation, which states that the profit from the core business operation. Next we can see that receivables. So receivables refers to the amount of money that the business is yet to receive from their customers, or the amount of money that the customers owes to the business. Now third is inventories. So inventories refer to the stock that a business holds. And next are payables. So payables refers to the amount of money that the business has to pay to their suppliers. However, payable states that the business is holding more on the cash rather than giving out to their suppliers. Now all these leads to the changes in the working capital. And next are direct taxes, which refers to the taxes paid to the government from their core business operations. Now moving on to the cash flow from investing activities, which states that how a business is positioning their investments for their long-term future growth. Now first are fixed assets purchased. We know that plant, building, land, all are fixed assets, and if we purchase these fixed assets, that means that cash is moving out of the business, which leads to the cash outflow. Now secondly are fixed assets sold. So it states that the cash is moving in the business and it is a cash inflow. Next are investments purchased. So investments purchased refers to when a company invests in other companies, stock, bonds, etc. Now investments sold, again it is a cash inflow as cash is moving in the business. Now next are interest received and dividend received, which means that the dividend and interest received by investing in other companies, stock, bonds, etc. Now lastly are other investing items. Now there may be certain investments items which are non-common that the company may have invested in. Now lastly, moving on to the cash flow from financing activities. Now it is all about how a company funds itself and how it raises capital. Now first we can see that there is proceeds from shares, which states that the money that the company receives from issuing their shares in the market, and it is a cash inflow. Now similarly, proceeds from borrowing will also be a cash inflow as cash is coming into the business. Now third, we can see that there is repayment of borrowings, which states that the money that the company has paid back, and as the cash is moving out of the business, it will be a cash outflow. Now fourth and fifth, we can see that there is interest paid and dividend paid. Now, both will be the cash outflow as the company is paying back the cash. Now the company now dividends paid means that the company is paying back the cash to their respective shareholders. Now lastly, we can see that there is other financing items, which may include the repayment of other kind of loan that the company may have. So lastly, why does cash flow matters? Because it tells us if a business can survive their daily day-to-day operation, because you cannot pay your rent, salaries and suppliers expenses with your profit. You need an actual cash. And cash flow is also a key factors for bankers and investors look at before giving out loans and funding. If you found this video helpful, then please like and subscribe and click the bell icon. And if you want to check out my previous videos, I've put the link down below in the description. Till then, see ya, stay tuned.